Welcome to the B.F. Anderson Techno Fundamental Report for July the 3rd. We're doing this a day early due to the holidays, but let's go into it. One thing we really promote is the concept of patience. You know, Rome wasn't built in a day, and what we're also seeing out there is the desire to get rich quick. There's no such thing. You have to get rich slowly. So there's a thing out there called meme stocks. These are companies that have gained a cult-like following on social media. This is an example of one of these stocks. It's AMC Entertainment. You can see here this stock has gone from roughly $300 down to $5. Now the latest one is Chewy. It's all about the millennials getting on the internet, and it's like lemmings to the sea. You know, they're just like jumping off. This is nothing more than stock manipulation. So it's not a Ponzi scheme, but it's awful close. So what I'm really pointing out is that there's a lot of young people that are millennials that are getting caught up in this, and it's just unfortunate. But you never know. I mean, they may know something we don't know, but I kind of doubt it. Profiles in Courage, written by John Kennedy, Senator John Kennedy, back in the 1960s. And what he really talks about is in this book, and this was actually required reading back in high school years, but it's about politicians that have the courage to lead the country. And we're going to get into a question here about our national debt in the next slide, but Kennedy's point was that most politicians lack courage. They need to have the courage to be able to say no. So in the book, there was a discussion about a Congressman, John Stephen McGrorty of California, who wrote a constituent in 1934. He said, "One of the countless drawbacks of being in Congress is that I am compelled to receive impertinent letters from a jackass like you, in which you say I promise to have the Sierra Madre Mountains reforested. And I have been in Congress for 2 months and haven't done it. Will you please take 2 running jumps and go to hell?" Now that's a rough deal, but it took courage for this politician to write this to a constituent that was asking for a ridiculous thing. So what happens here is these politicians that run our government end up doing so much federal spending that our interest payments on our national debt currently have exceeded our defense spending. We are currently at $1.1 trillion in debt interest payments versus $800 billion in defense spending. In 2020, we were at $500 billion in debt interest payments versus $700 billion in defense spending. I think this graph says it all. We've got to have leadership in Washington that has the courage to say no. Tough, easier said than done. So let's take a look at the market. As we've said for many weeks now, if not months, the NASDAQ is acting picture perfect. It's absolutely picture perfect. And that's because it is a market cap weighted index that is being driven by just a few stocks. So as we jump to the mid cap stocks, which are not large companies, these are middle-sized companies, this is a completely different picture. You know, it's not picture perfect. Then if we go on to the New York Stock Exchange, all the stocks on the New York Stock Exchange, you're kind of seeing the same picture. Here we have the small caps, just not happening. So the thing about the small caps that's important to understand, this is a risk-on index. So when confidence builds in the economy and people feel very good about the future, you're going to see it in a small cap index, which just isn't happening yet. So here's another large cap market cap weighted index, the S&P 500. Picture perfect. So overall, the primary trend of these two indexes is up, and it looks very positive. However, and also I'll mention here, volatility according to the VIX index is breaking to new low levels, which is is a very positive thing. So hopefully what's going to happen here is that the generals lead and the troops will follow. So here we have the power index, not power index, excuse me. This is the aggression index. This is where we're comparing the NASDAQ to consumer staples, or technology compared to toilet paper and toothpaste. This is breaking out to new highs. So it's a mixed story. It's a mixed story. So stock selection in here is pretty darn important. Now, our three economic indicators, you can kind of see here, interest rates have popped up a little bit above the 200-day moving average. We're at a 4.436 yield on the 10-year Treasury. Oil prices moving up. They're kind of popping up a little bit, $83 a barrel. And then we have the financial stocks probably going in line with interest rates, pretty much turning up a little bit. The other troubling thing here is we're seeing a lot of new lows on the New York Stock Exchange. We like to see 40 a day or less, and just the other day we had 58. And you can see here we've had an extended period of time above 40. What this basically means is that there's a lot of stocks hitting new lows. So if you look at like the construction stocks, the home construction stocks, this looks pretty bad. I mean, it just doesn't look positive. So, just something to be aware of. Now, back to the small caps, you can see here where I'm doing this ratio where I'm comparing the Russell 2000 ETF, which is small cap stocks, compared to the large cap S&P 500. And you can just see here, this is in a very serious downtrend. So as also we look at the international markets, what I'm doing here is I'm taking the Vanguard Total World Stock ETF and I'm comparing it to the S&P 500. And you can see also internationally, the markets are just not doing all that well. So what does this all mean? It just basically means you're going to have to be very selective on stocks that you pick, but also I would continue to maintain a hefty cash position just to stay flexible. So if you have any questions, please let me know. Thank you very much.